Thanks again for coming to this first time homebuyers course, What I Wish I Knew When I Bought My First Home. So let's go. I kind of just usually ask people how they're feeling about buying a home. Some of the ways that my clients have let me know at first is they could be concerned, stressed out, intimidated, anxious, uncertain. Would love to know if any of you guys are feeling a certain way about buying a home. What would describe it? And I'd love to get you to the other side. My name is Amanda Gant. I was born in Fort Lauderdale. I spent my childhood in Cocoa Beach, Florida, where I moved when I was 1 year old. I did start my own real estate journey with no savings, a job that paid $45,000 a year, and no knowledge about buying a home at all. Since 2016, I became a real estate investor, and right now I have 11 properties. I joined Momentum Mortgage, which is the company I'm at now, to help bring my expertise to Floridian home buyers so that you all can have an opportunity to buy a home for you and your family. And if you'd love to investigate investment as well, because real estate can be a great way to build your family wealth. And a little bit about the team I work on. So it's not just me. Got a really awesome team behind me with over 20 years in the business, and together we provide support as a team for fast pre-approvals, quick closings, and the best terms and rates that we can find for your situation. So we've got John Clark, Ashley Clark, and Peter Habib. It's a great team, and we'd be so excited to work for you. Now, we want to talk about home buying today. So just to give you the massive overview, what are the steps to home ownership? Come to the class to learn everything. Get a pre-approval from your mortgage broker, and that's something that I can help you out with. And once you get pre-approved, you want to get a realtor to help you find the house of your dreams. So you search and you find one, you put an offer, and then you get a home inspection, finalize the financing with me, and you sign, and you're ready to move in. So now that we know those steps, let me see. We want to get clear. Is buying something that is for you? Well, you obviously showed up here today, so you might have a few reasons already about why you are buying a house today. Some of you might care about the opportunity to create wealth. So if that's something you're interested in, I'd love for you to see this chart real fast here, which is the difference between the median net worth of a homeowner and a renter. You can see the renters in red have a median net worth of, in this latest estimate, $10,000, while homeowners have a median net worth of $430,000. So when you're looking at just that alone, you might say, I'd like to be a homeowner as I will get the chance to build equity as the years go on. There are additional reasons as well. For instance, over half of older employees plan to work indefinitely and never retire. This is a headline from Money Magazine. So if you can guess which half of those older employees are planning to work indefinitely and never retire, is it the ones who have a home, have the median net worth, the $430,000, or is it the ones that do not have a home and are renters and have a net worth of $10,000. So I'll let you guess that. But if you're looking to have a nice retirement, a nice amount of money, buying a home might be the way to go. And I've got a couple of examples. I've got two examples here to show you why. We've got two people kind of starting at the same time. So we've got two people. This is where we're comparing the two paths, the lifelong renter and the person who becomes a homeowner. They are the same age, these two gentlemen. And the lifelong renter just never bites the bullet, never goes for it, never talks to a lender, and says, I'm fine just renting. And he's renting at a 3-bedroom, 2-bathroom house for $2,500 a month. Over 30 years, he's spending $1.5 million. Well, our second person decides to buy a home. He bought a home with 1% down. He got a $300,000 place, and his monthly payments are also $2,500, including his taxes and insurance. His monthly expenses do go up a little bit every year, but not quite as much as the rent goes up. And so over the course of 30 years, he's spent around $1 million in housing, which is $500,000 less than our lifelong renter. So he's already $500,000 ahead. The other thing you get is when you get to the end of your working years, you want to retire. So the person who's been renting his whole life is not making money anymore. He retired, and so now he needs to rent something more affordable. He moves into the most affordable place he can find, a small 400 square foot studio, and he's paying $1,000 a month for that in 2055, let's say. And it's hard to find more money than that on Social Security. So he's really stretched thin and he keeps paying for someone else's home. I could see Eltha saying she's very, very tired with renting. Exactly. You can imagine after 30 years of doing this, he might be tired. Whereas our homeowner has been paying off his home, and at the end of 30 years, he actually got it paid off. Now his home is worth $758,000. And we're being very conservative here, saying that the property value has only increased with the average rate of inflation in our example. So with his mortgage paid off, he only needs to pay taxes and insurance, which is an estimated $200 a month. Again, we're being kind of conservative with this, but it's much more affordable than $1,000 a month in rent. Our homeowner also has the option to take out a reverse mortgage at this point. He can take out home equity in order to supplement his Social Security income and continue living in his home and paying no mortgage payment. So that's something that is available to folks once they hit 62 years old, to homeowners. So, and he can still leave the home as an inheritance to his family members or to charity upon his passing. So this homeownership route, you might see many benefits to it over a lifetime. And if you're ready to get on that journey now, why don't you let us know in the chat if you'd be interested in being a lifelong renter or homeowner? I know many folks are here at least exploring homeownership, so I'd be really excited to talk about some of my particular tips that I have from my, let's say, 13 years of buying homes. Here are the things that I wish I would have known. 5 biggest lessons. But before I get to the lessons, one of the things I think most people want to hear, and even the people who are joining me today on this call are interested in hearing, is what's the most expensive house I can buy? They want to know the most expensive house you can buy, because from there you can always scale it down, but you don't want to be looking into a house that you can't afford. So you want to know what you can afford. You want to know how much will that monthly payment cost you so that you can build your budget around it. And you want to make sure you can qualify. So if you're like most people I've talked to, you want to know these things. Hopefully you want to know these kind of things. That's why you're here too. It helps you to accomplish your home ownership goals, to see how much you can afford, how much it will cost you, and that you can qualify. So now I want to start with the things I wish I knew when I first started buying a home. And these are things that you're going to know starting today. So you're going to be way ahead of the game. So I've made some mistakes over my years, and I will be here to tell you, even if you make mistakes, real estate is still going to put you up on top. And so you're going to be making way fewer mistakes because I'm going to be sharing you what I wish I would have known. So the best thing is, I wish I would have known how much money I needed to close on a house. I'll tell you, I just thought it wasn't possible. I had, let's say, $10,000 in savings, and I thought that wasn't going to cut it. 70% of Americans think that you need at least 10% down to buy a home. Well, before we find out how much you do need, let's find out how much people actually put down. So most people don't put 20% down on their home. The average down payment on a US home is 13%. But by first-time home buyers, that average down payment is actually 7%, meaning that many people put less and many people put more. You can actually put down as little as 0%. Where the idea comes that you've got to put 20% down is because when you do put 20% down, you do avoid a charge, which is called PMI, private mortgage insurance. Basically, anytime you put less than 20% down, the regulations that we have in the government make you take out additional insurance on your loan, and that will cost you, let's say, anywhere from $100 to $250 a month. You can see this calculated on many online loan calculators. So you will avoid that monthly fee if you start out with a 20% down payment. But as most people recognize, that it's very difficult to save that much money. And there might be other things that you're spending your money on, such as savings account for your children's college, or perhaps other investments, your retirement investments, whatever it might be. So there are a lot of other options we have, and you'll see them all listed here. 5%, which is a great choice. 3.5% for FHA loans. And FHA loans are available to anyone as their own home that they're going to purchase. So you don't have to be a first-time home buyer, and you don't have to have any income limits on yourself. You can make as much money as you make, and you can still qualify for an FHA loan. We've got those special 3% down options that the government sponsors, which is available to moderate income first-time home buyers. So maybe you own a property in the past 3 years, you're now not a first-time home buyer. So you might have to go to an FHA loan for 3.5% or a 5% conventional loan. And we also have a 1% down loan, which are made available through Momentum Mortgage through a grant program that gives you that 2% on top of that. So you guys are getting the real deal. There are 0% down programs that Momentum Mortgage has access to that are available for first time and non-first time home buyers. So this is all kind of up to you. We can decide what works for you in consultation together to find out what is going to get you to the goals that you want. And we're very happy to do that. I want to welcome Upendra. We saw you join us. Very great for you to join us today. Stick around to the end, Upendra, and you can be eligible for the $500 credit as well. In this example, I do want to talk about how a client can qualify to purchase a home without having any money going away from their bank account. Now, it might go away they might have to put an earnest money deposit down, but they can get that back at the closing table, just to be clear. So Anita is a client who wanted to buy a home. She's looking to buy a home for $300,000. She participated in our 0% down payment program, so she had no down payment. There are closing costs. These closing costs might be around 4%, but she was doing the FHA program, which allowed her to request the seller pay her closing costs, and she was able to negotiate that. So the seller paid all her closing costs, and she didn't need any money to close. This is an example only, but if this is one of your biggest goals is to close with no money, out of pocket after you close, then we'd love to work with your numbers. As I said before, you will need money for your earnest money deposit, for your appraisal, for your credit. There's different little fees you'll need money for, but you can have that refunded. However, it's always great to have a plan to have at least $3,000 available if you need it. And honestly, it's much better to have more money available because it can make the situations easier. See, in this example, Anita had to negotiate seller's assistance. And sometimes some sellers aren't going to want to pay your closing costs. So this is all something that me and your realtor can help guide you to figure out what's the right option for you. But my biggest thing here is to let you guys know all the options and not box yourself in, because knowing the options is going to be the difference between you guys going for a loan and getting what you want and not doing it. And I'm in the business of helping my clients get what they want. Generally, you will need a steady income. You'll need a credit score of 640 or above, and income that is higher than your monthly debts. That is all something that we can check together on our consultative calls. There are so many different options, and that's why we pull it all together, because people can get mortgages with scores of 580 or above. They just might not have all of the rainbow of options that I'm telling you about. So that's why we encourage folks, when you're serious, get on that quick call with me. We will talk about your situation, and then we will be able to look into our database of all these programs and see which one's going to work for you and go over all of that with you. So the next lesson that I wish I would have known before I started buying home, which is the importance of getting a pre-approval. So my story with this is I didn't even know what it was like to talk to a lender. I thought if I talked to a lender, I would be wasting their time. I thought that there was no way I could qualify for a loan. I thought I did not make enough money. I thought all of these things. Here's the truth. You don't know what you qualify for, and that's okay, but the lender will, and they are ready to have a conversation with you to uncover that. So me as a mortgage lender, my business is actually to help people explore their situations and find out how we can make home ownership possible for you. And then together you can take a look at that and decide if this is something that you want to do or not. So let's talk a little bit more about pre-approvals and how easy they are and what they are made up of. So Who here has received a pre-qualification for the purchase they're hoping to make? And if you haven't gotten a pre-qualification already, that's okay. That's what I'm here to do, is to help you with that. Now, moving on from this, why should you get pre-qualified first? I'm going to go through this real fast. One, you're going to know how much you can afford, so you don't waste your time looking at things you can't afford. Not right now. Doesn't mean never, but not right now. So it focuses on how much you can afford right now. You can always trade up and buy a new home when you start a business that's going really well, but we want to get you into your home now. It lets you focus on the right market. So not only how much you can afford, but you might start to see, well, I can have a 3 bedroom on the beach, or I can have a 4 bedroom if I go inland a little bit. And I actually want the 4 bedroom more because I have a lot of guests who visit me. So you can start to determine what neighborhood is going to be right for you. When you want to actually see houses, you are able to show sellers that you are serious. You're able to show your realtor that you will actually be able to buy that house. Therefore, it really can't make a lot of sense to see, let's say, 3, 4, 5, 7 houses when you're not even sure what you can buy. So we want you to be sure. And also, when you get pre-qualified, you get to see an estimate of how much all this is going to cost you in monthly costs, in closing costs, and this is going to help you feel confident about moving forward. So we definitely encourage you to get on that call. Let's book one. Let's talk about your financial situation and your dreams. This is something that you can click on anytime during our presentation, because the real value is going to be when you talk with me and we get you pre-qualified, and then you can go forward and go shopping. You'll be that much closer to saving $500 off your closing costs. The pillars of a mortgage approval are your credit, so that would be your credit score, the amount of debts that you have, the amount of income that you have, and the amount of money you have for a down payment. You don't have to worry about all this stuff. We collect all this data, we tell you what to send us, and we will talk with you about the results we see. So very easy. We are focusing on your debt to income ratio. This is just a key word I want y'all to know, which is helping us make sure that these homes are affordable for you, which sets you up for success. Basically, it would be great, again, to be qualified and get a mortgage for that mansion on the beach. But when the monthly payments come due and they're $10,000 a month and I'm not able to pay it, I'm just going to get kicked out of that house anyway. So we're not going to do that. That does not happen. You are going to be able to afford the house that you buy. You basically cannot be pre-approved for housing costs that are over 50% of your monthly pre-tax income. So that's what we're going to say about that. So we're all about safety. And again, check out the loan pre-qualification. We do this in 3 phases. First of all, we talk about the research phase. When you call me, we'll be talking about your goals and your belief around home buying. I'll talk about requesting 3 simple documents from you: your bank statements, your 2 pay stubs, and a credit report that you can download for free. With these 3 basic documents, I'm able to give you a basic budget and to get you pre-qualified. Now, when we want to get you fully pre-qualified, we'll ask you for a few more documents and you'll fill out our online loan application. All of this costs you nothing to do, and you'll get that pre-qualification letter so you can go shopping. And then once you go shopping, we're going to start to do what I call the closing phase, which is where we do the final details on your loan and really just get you ready to sign those documents at the end, and you will have your very own home. So it's not a difficult process, and it's one that we guide you through step by step. So you do not have to remember all the steps. We will be with you answering questions all along the way. And trust me, I've done this for myself 15 times, and I've done this for countless clients as well. So we'll be able to guide you through to the other side. And if you have to think about it, around 65% of American households are homeowners. So this is a process that, though it seems confusing, that most Americans have been able to do, and I'm sure you'll be able to as well. Now, let's see. The third thing that I wish I would have known when I first started getting to buying homes: don't stop with one rejection. I will tell you, if I would have stopped with my first rejection, I would have never become a homeowner. I was buying a property that was difficult for many lenders to lend to. It's called a cooperative. It's a certain kind of a condominium. And I just had to keep picking up the phone and saying, will you lend to a cooperative? Will you lend to a cooperative? Until I finally found someone who did. I got through like a month and a half later, and then they said, oh, we don't lend to cooperatives. I had To stop what I was doing, I had to pay money to the sellers just so they would keep me and not go looking for another buyer. I had to pay them rent basically. I had almost no money left over because I was very young. I was still in grad school and the deal almost ended, but I found a lender that would work. You don't have to probably go through what I did. All that to say is that some lending institutions might have told you no, but that doesn't mean they all do. And I'll give you a few examples. Sometimes we all think, hey, why don't I go to my bank and get a mortgage? Because my bank knows me. I've had a checking account with them for 5 years, for 10 years. They see that I make money. They see that I don't over withdraw my account. So they're probably going to give me a better deal. That often has nothing to do with getting approved or not. So a lot of times a bank just has a few programs for mortgages because they have many different ways that they make money. So if you don't fit into one of their few programs, they're not going to be able to help you and they're going to tell you sorry. What is the better option a lot of times than a bank is to go with a mortgage broker. And so a mortgage broker is someone like myself where we have relationships with anywhere from, it depends on your mortgage broker, but here at Momentum Mortgage, around 21 different lenders. And so having that access in one point of contact can allow you to access a broader range of loan options. And what that actually does for you is it can get you better rates, it can get you lower down payments, it can get you to a yes where other people have said no to you. So I think that this is really key. Mortgage brokers' main business and only business is getting people loans for homes and property. And so they're really going to be dedicated to getting you stuff that works. That gives you a better potential for competitive rates and cost savings. In fact, borrowers who used independent mortgage brokers saved an average of $10,000 to $13,000 over the life of their loan compared to using other non-bank retail lenders. And it can also save you time because you apply once with me, and that's all you need to do, and it will allow you to save time and reduce errors in filling out multiple applications because you just fill out one. And we provide personalized support throughout. So starting with this webinar, for instance, and then going through the consultative call, going through collecting your documents, helping you select the programs that work for you. We provide all of this personalized support. And so that's why we are really excited to be someone who can help you. If you've been rejected before, you don't necessarily will be rejected again. If you don't qualify at this moment, we're going to be able to give you clear steps for you to be able to tell when you can come back to us. But I know that I'm actually able to do a lot of things that banks aren't able to do. And I can start to name off many of them, but it gets into the weeds. So it's better if you just give me a call and we can look at your situation. And again, if anyone here is already pre-qualified, I would love to work with you because I know that our company can do better. And this is the biggest purchase you've made. So there are some times though when people will not be able to qualify. And I just want to share those with you because knowing that will also help you learn what you need to do to qualify. So if your credit score is under 580, there's literally no lender who will be able to give you a mortgage. You can find out your actual credit score by purchasing a membership with myfico.com. And then when you purchase a $30 membership, they will show you your credit score for mortgages. That is the only place I know where you can get for a reasonable price and without showing any credit pulls on your credit, your mortgage credit score. So some people will have credit scores showing up on their app saying 620, 612, but when they go for a mortgage, their mortgage credit score is under 580. So I wanted y'all to be aware of that. I have had that happen to a client recently. So you can avoid that by going to myfico.com and paying for a $30 membership fee for a month. Also, the other thing that will make you fail is if you don't have verifiable income. So verifiable income is if you've got a regular, let's call it a W-2 job where your employer pays you with pay stubs, that's going to be very easy. But you can also qualify for loans with other kinds of income, but you have to show it. So if you have a business and you're getting paid in cash and you're not depositing that cash in any one kind of bank account, it's going to be hard for anyone to prove that you are making money. So that's going to be really hard for you to qualify. That being said, if you've got a business and you're showing the income in your bank accounts, great. If you are showing the income in your tax returns, that is also helpful. But if you're not showing it in your tax returns, but you are showing in your bank account, that's another way that can work it out. So we encourage people to look at their accounting systems to keep profit and losses if you have your own business. The other thing where you will definitely fail is if you literally don't have any savings at all. So I told you that you can, buy a home with no cost to yourself, but that doesn't mean you can have no savings. You will need to have savings because lenders will want you to have and show in your savings account, in your retirement account, stuff like that, money after closing because they want to make sure that you will be on track to paying your bills. And sometimes you will need some money in order to close. Most times you will need some money. What do you do if you've got no savings? Well, you can get a gift from a family member or a very close friend. This has to be a very close friend. You will not have to pay that back, so it really needs to be a gift. You can use your retirement fund for this. So if you've got a retirement fund, look into how you can use it, or you can just start saving some money. So that can also work out for you. So we want you to succeed, and these are the three ways where you would fail if you don't. Just let me know if any of those apply to you, and I will be able to counsel you to go forward. All right, here's something else that could blow your mind. You can have more than one mortgage at once. I bought a condo in 2012. I didn't even look into the market. I didn't even think about it. I didn't even live in the place because after a year, I put my mother on the deed and my mom lived in the place. So I'm renting, my mom's living in a condo, and I just thought that was the end of the story. Clearly, I can't afford another place because I have student loans, I don't make that much money, and I'm paying a condo for my mom. Well, guess what happened 4 years later? I qualified for another home. And this home was awesome. It was $400,000. It was 2 units. It was amazing. How does this relate to you? Well, when you start in your real estate journey, you might think, well, how can I grow after that? What are some reasons you might want more than one mortgage? Let me share a few of those with you. Because when you imagine possibilities, that's when things change. I would never have imagined that I would be someone who's owning 11 properties and is going to buy another one in the next coming months. So you might want more than one mortgage because maybe you bought a home, but you want to move into a different home. So for me, I bought a condo and I put my mom on the deed and she was living in it. Well, I want a home for myself, so now I want two mortgages. Just for an example, you might want to continue to earn equity by renting out your current place. So let's say you bought this home in 2018. You have a really low interest rate, the prices were lower back then, and your mortgage payment, let's just say it's $1,000, but you could rent it out for 2,500. Maybe you want to move into another house and make $1,500 in cash every month by renting out your property. You can do that if you get another mortgage, and we can help you with that. It's a calculated strategy to build your wealth, and you might just want to keep the property in order to use it later. Maybe you're not really big about, I need to maximize my cash flow, I need to be as rich as possible. Maybe you're like, yeah, I'll rent it out, but really the thing is, I do like that property and I might want to move back into it in a couple of years. But right now, I need to live in, let's say, another state for a job. So you might want to keep the property because you really love it. You want to use it later for yourself or your family. There's so many reasons. So we can definitely help you learn how to qualify for more than one mortgage. Another thing that goes along with this is house hacking. What is house hacking? Maybe you've heard of it. And again, strategies that can make your mortgage payment lower. So there are two kinds of house hacking. Usually it would involve renting out a portion of your property to others. So you might get a multifamily property. This is where you have one closing, it's one property price, but there's actually 2 units, maybe three, maybe four. So in the place that I bought, there was a 3 bedroom apartment downstairs on the first 2 levels, and there was a 1 bedroom on the upstairs, separate entranceway and everything. And so I could rent out that 1 bedroom, make $1,250 a month, which paid half of my mortgage for me. So I'm living in a huge place that would usually cost $2,400 on its own, but now I'm getting half of my mortgage paid by my upstairs. So you might be interested in looking into this. If so, let me know in the consultative call and I can be sure to give you more tips. Another strategy for house hacking is to buy a new primary home every 1 to 2 years. So, vocab word primary home. That means the place that you live. Because only in America, when you live in a primary home, can you get a loan for 0% down, 1, 3, 3.5, 5% down. So you're putting less money at the closing table, which will allow you to buy another place sooner. So for instance, say you bought a place, let's say this year, for $200,000, and you had to put, let's say you took to the closing table $15,000. Well, now you want to buy another place. If you're going to live in it, you're going to move out and live in this new place, you'll only have to put, let's say, 5% or 0% down, depending on what you decide. But if you were going to buy an investment property, you would need to put at least 20% down, meaning it would take you so much longer to save that money. So what you can do if you do want to grow more places, so these are all sorts of things you can do. Open your mind to the possibility. I've done a strategy of both of these, and that's how I've gotten up to 11 properties. Let's see. I talked about this already. My original house hack. 2 units, 1 bedroom upstairs, 3 bedrooms downstairs. The upstairs rented for $1,250. I got a roommate actually downstairs with me, paid me $800 a month. My mortgage was $2,400. At the end of the month, I only had to come up with $350. Tell me how there's a much better deal than that. So these are things that you can look out for if you know what to look for. And often that might include getting a knowledgeable realtor on your side, but you got to know what to ask for, or else your realtor won't even know what to show you. So there you've got the idea planted. Let me go on to my last lesson of the day, which is understanding the best timing to buy a home. Now, before I go on with this, I want to say, what is the purpose of me talking about the best buying timing to buy a home? It's because if you are in this timing, I want you to recognize it and act now, because it won't get any better. If you're not, if all of these characteristics that I tell you on the next slide don't apply to you, as you heard before, we can finagle and work around and figure out your strengths so that we can still get you into a home. But if these following principles are characteristics that are applying to you, you definitely want to get a home now so that then you can move on with your life, because we never know what tomorrow brings. So let's take a look at this. The best time to buy a home is when you can afford it. Yes. So definitely check with your mortgage broker. We will let you know what you can afford. The best time to buy is if you've had, I call it a W-2 job, but like your regular job where you have a regular employee giving you pay stubs, and you've been in that sector for over 2 years. That is the easiest situation for you to qualify for a loan. Okay, that being said, we might have people who are business owners on the call. We might have people who are consultants, who have clients of their own. That's okay. You just need to keep your income in a specific organized way. You need to pay taxes on it. So that's why I say a W-2 job. So if you have a W-2 job, you're thinking of maybe starting a business, I'm going to tell you, let's get that house before you go start your business. All right, next. If you have no car payments or very low car payments, this is a great time to buy a house, because you never know when you're actually going to need to buy a new car, because maybe your car breaks, but cars will break. So now that you don't have a lot of car payments, or your car payments are very low, let's say $300, $400, it's a great time for you to buy a home. When you start to be getting your new Teslas and your car payments are $1,200 a month, you don't have any money left over to qualify for a home. So I want to tell you, hold off on the car payments. Let's get you your home first. Another great time to buy if you are low in other debt. Maybe you're not using your credit cards very much. That's great. You don't have a lot of debt right now. That's a great time for you to buy a house, because you'll be able to afford a lot of home. Again, doesn't mean that you need to spend all of that money, but it gives you more options, and options are also going to be helpful. So if you find yourself in this situation, a steady job where you've been in the same sector for over 2 years, now that even means you might have just gotten a new job last month. But if it was in the same sector, that's going to work. Very low car payments and low credit card utilization. You need to buy your home. But again, if this doesn't apply to you, that's okay. Talk to me and we'll figure out how we can get you under control. Amazing. You can overcome most of the situations. Just buy a car later. But don't quit your job to start a business before you buy a home. Buy a home before you do this stuff. Perfect. Now I want to recap what we've talked about today. I want you to remember that there are first-time low down payment programs and also low down payment programs for non-first-time home buyers. If that's important to you, let me know. We'll talk about how you can minimize the amount of money you need to pay for your out of pocket for your home. Next, we want to get a pre-approval. before you go and look at a lot of homes. We've talked about why. We want to make sure you can afford it, and we want you to not be wasting your time and spinning your wheels. Once you talk to a lender, that's when you really know what you can afford, and you're going to feel confident instead of just having this feeling that I don't think I can do anything. You can do something. So we're going to find out what you can do. The third thing we talked about is don't just go to your bank and don't put up with a rejection. Talk to a mortgage broker that has access to different lenders, including many banks, and then you'll be able to find out if there are programs that work for you. And if there are, we're going to go after them. And if not right now, we're going to know exactly what little things you're going to have to achieve so that you can get that home. Next, 4, you can have more than one mortgage. And now you know some of the benefits of doing so. Property ownership can help you with. You can help other family members. You can become a landlord. You can keep another property in your back pocket for when you want to use it for yourself and your family. All this can be possible. We'd love to talk to you with strategies to do so. And again, you've now learned the optimal characteristics about when it is to buy a home. And you've realized that if you don't hit all those characteristics, it's okay. We can still work ahead for you. But if you do, this might be a great time for you to buy a home. So after hearing all the things we talked today, I wanted you guys to think and tell me if your time has been well spent, because I'm not sure what you knew exactly about home buying before this webinar today, but I do think it's a safe bet that we covered something that was new and valuable to you. And think back to 50 minutes ago when we first started. Now, are you feeling better or calmer, more informed about buying a home? And if so, would you feel more confident in being able to purchase a home today? I've seen a lot of those thank yous so far. Awesome. So if you want to spend more time with me and really make this a reality, and I do think the people who join me today want to make this a reality because you saw the opportunity to invest in yourself with this hour-long webinar and to get $500 back in your pocket. I would love to be working with you. My passion is for real estate and my passion is for economic empowerment. So no call is too short or too long, and you are never too early or too late in the process. So again, if you book with me, you're going to see a calendar where you can select time slots that are I'm available and find one that works for you, and that will book you into my calendar. And you will get to learn on the call with me what you'll need to buy a house, how much it will cost you, and you'll secure your future. And again, many customers have left the call feeling really excited about what they can afford. I want to show you this picture. So some people have a smaller budget, and this client had $1,000 budget. And look what we found with her after talking about her situation. This amazing complex with a swimming pool with a waterfront view out there in Orlando. She left the call understanding what I could afford and a few example properties. I know who to call when I'm ready to buy. So again, even if you're just thinking, let's have a call and figure out what you could qualify for. Got about 5 minutes till the top of the hour, and I do want to thank you guys for joining me, staying to the end, for giving me positive feedback. I saw feedback from everybody here. I really appreciate that. It keeps me going. It makes me think that, we can change our own lives with the decisions that we make. And one of the biggest decisions that we can make is where we're going to live. And that's because each month we spend anywhere from $1,000 to $3,000 on that. And that can either build into your future or it can disappear for all time. So whether we're spending that money or not, it's a really important thing to think about. If you're thinking about building wealth for yourself, are you going to worry about the $3 questions or the $30,000 questions? So are we going to sit there and worry about, oh, I bought a $3 coffee at Starbucks, now I can definitely not retire? Is that going to really make a difference? Or is something like getting a home going to make a difference in the amount of wealth and the way that you can take care of yourself and your family? And that's why I get along here and do these webinars, is so that people can see a new way of thinking. Just to say that, I'll go on to a question that I had last time. So this question comes from a woman who said, what is my main concern when it comes to my credit and income to debt ratio? I have 7 months left on my lease and I'm not renewing. I am not renting anymore. Is 7 months enough time for me to get into a position to buy? So it depends on where you're starting at. So if you start with a call with me, I will be able to tell you how long it will take you or not. So if your credit score is good and you've got good enough income, we probably just need 1 month in order to buy because it takes about 30 days for us to get your loan together. But you also at that time need to find a place to buy. And then once you find a place to buy and you get your offer accepted, it's generally going to take 30 days to closing. So you can definitely get into a new place within 2 months if you're ready to go. However, if we check you out and your credit needs repairing, or you need to source some gift funds, you might need some gift funds from your friends or family members, that might take a little bit of time for you to coordinate. So we will work that into your plan. So anywhere from 2 months to as long as it needs to take is how long it can take you to get into your new home. But definitely 7 months is going to be appropriate for most people. And what I would also say to people who are here is if you have a lease that's coming to an end, don't even worry about it because how many people do you think got their home and were able to negotiate a closing date exactly on the same day that their lease is up? That doesn't happen. So you're always able to work with your landlord with the advice of a realtor in order to leave the place where you've been renting. So we will be able to discuss that with you. Well, that's my suggestions for people who are renting and are looking to buy. Is just talk to us about it. Let us know when your lease is up. Let's take a look at your lease and see what kind of relationship you have with your landlord, and there's always a way to work it out when it's time. Do you want to tell your landlord right away that you're going to be looking for a home? No, you want to get pre-qualified. You want to work with your realtor. You want to find a place. You want to have your offer accepted. Then probably you want to let your landlord know. So that's something we can all talk about together and make sure that it's the best experience for you. I do see we're at the hour, so I want to thank people for joining me. So thank you guys once again for joining us, for entrusting your hour to me. Hope you learned something new, and I hope you can share this with your friends and family as well, because I would love to have more people joining us on these webinars and more people getting geared up to buy homes because there is enough for everyone.